As a financial planner, there are a few key things that I like to review with my clients at least once per year, and they're all things that everybody should be reviewing on a regular basis. And what better time to revamp your finances than the busiest, most expensive month of the year? I'm going to go through 7 financial checkpoints to hit before the end of the year that will keep you on track for next year and maybe even improve your marriage, because let's be honest, money is one of the biggest sources of tension with couples. Number 1, a year-end financial recap, ideally with your spouse or partner. Just put together a financial picture. I call this the financial snapshot, aka your net worth. List out all of your assets. I like to break it out between liquid and illiquid. So your liquid would be things that you could access if you needed to in the case of an emergency, like cash, high yield savings accounts, investment accounts, crypto, things like that. And then illiquid assets, things that would take a little longer to convert to cash, like property or jewelry or a car. And then list out your balances on all of your debt. Now, that sounds tedious, and it is if you do it manually, which is why I prefer to use something more automated like Monarch Money, not sponsored, where I can just link all of my accounts, and at any given moment, I can just see a quick snapshot of where I'm at. The second part of this financial recap, which is really the more important part, is putting together a cash flow review. So map out all the cash inflows throughout the year, everything that you earned, and then list out all of your cash outflows. So what did you put towards savings, your debt? What did you spend on essential versus non-essential goods? It really doesn't need to be more complicated than that. I think people have the tendency to overthink the budget. Really what we want to do here is break down what did we spend on things that were necessary and what did we spend on things that we could have gone without. Again, a budgeting platform like Monarch, YNAB, EveryDollar allows you to have this information available on demand. And I think people hesitate to use these platforms because it means I got to go in and set up a budget and I'm going to get emailed 5 times a day. It doesn't have to be that complicated. Just go in. You don't even need to set up a budget. Just link your accounts and then it can start accumulating spending data so that you have something to review at the end of the year. Understanding what you spend every year on basic living expenses really is the starting point for a lot of financial decisions. For example, it helps you figure out what should you have in liquid assets, that emergency fund, ideally 3 to 6 months of basic living expenses. It's also a major input for what you need to be saving each year, since the whole point of saving is to create a future income stream to cover your living expenses. Well, you need to understand what those living expenses are that you're trying to cover eventually. And finally, it helps you understand how much you can afford to save each month, ideally 15 to 20% of your income, as a generic starting point at least. All right, now we move on to part 2, which is optimizing your savings. If you have access to a 401k, you probably want to make sure that you've contributed enough into the 401k in order to get the full employer match. This is free money. It could be 3, 4, 5% of your salary that would go into this 401k, absolutely free, as long as you are contributing enough to get that match. You have until December 31st to make those contributions. So check where you're at. Make sure you've hit that and enjoy the free money. For both the 401k and the 403b, you have until December 31st to hit your maximum contribution limit. For 2024, that's $23,000. If you're under 50, it's $30,500 if you're 50 or older. For the traditional IRA and the Roth IRA, you actually have until your tax filing deadline, April 15th, to hit the maximum contribution for the year. For 2024, that's $7,000 if you're under age 50 or $8,000 if you're 50 or older. However, if you plan to do a backdoor Roth or a Roth conversion, that needs to be done before 12/31, because anytime you do a conversion, it's going to be counted for tax purposes in the year that the Roth conversion is completed. Now, with the health savings account, you'll also have until April 15th to max that out. This is one of the best savings accounts out there because not only do you get a tax deduction for contributing to it, but it continues to grow tax-free. Now, for other savings accounts like the 529 plan, that's going to operate on a calendar basis. So if you live in a state where you get a state tax benefit for contributing to a 529, you're going to want to make that contribution before the end of the year. And then lastly, on savings accounts, you have until December 31st to spend what is left in your flexible spending account. This is the FSA. It's different than your HSA, the health savings account. For the FSA, this is a use it or lose it type situation, meaning if you don't spend that money on qualified medical expenses before the end of the year, you lose that money. Now, some employers do offer you a grace period where they'll give you until March 15th to spend that money, but just keep an eye on this one. And if you need some ideas for what to spend this money on and you don't have any medical expenses or bills due, check out this website here. It gives you some ideas for FSA eligible items. Part 3, optimizing your taxes. Now, I like to start with tax loss harvesting. So if you have investments sitting in a loss position in a taxable brokerage account, you can sell those, use those losses to offset gains that you've realized on other investments. And if those losses exceed the gains, you can actually use up to $3,000 of those losses to offset other income like your salary or business income. Now, this is specific to brokerage accounts because they're taxable, so you wouldn't want to do this in an IRA or a 401k. And you just need to be mindful of the wash sale rule, which prohibits you from buying the same investment or a substantially identical investment within the 30-day period of selling that investment at a loss. Charitable giving is another great way to get a tax deduction and make an impact, assuming that the organization is not committing fraud. If you itemize your deductions, meaning you don't take the standard deduction, you can get a tax deduction for donations made to qualifying charities. Now, the organization needs to be a 501c3 organization in order to qualify for the tax deduction. You can check to see if the organization is an IRS tax-exempt charity on this website here. It's also a great time to do tax projections to see if your employer withheld enough taxes throughout the year, or if you're a business owner, you need to make more estimated tax payments. Now, I did a full video on how to figure this out with a link to a free worksheet, so I'll put that in the description below. Now, while it is too late in the year to make any meaningful changes to your tax withholding, at least at this point, you know, instead of finding out in April that your employer didn't withhold enough. So now you have 4 months to kind of figure out how to make up for that shortfall. Last thing as it relates to taxes, and I alluded to it earlier, but maxing out your retirement accounts may also be a good tax saving opportunity for you. Part 4, this is a great time to consider rebalancing your portfolio. Over time, different investments grow at different rates. So your equity portfolio maybe had a great year and now it makes up a bigger portion of your portfolio than you originally intended. So depending on your phase of life, it may make sense to take some of those gains off the table and reinvest them in a different portion of your portfolio or different asset classes. Now, ideally, you have a target asset allocation. For example, you might say you want 60% of your portfolio in US stocks, 20% in international stocks, and 20% in fixed income. So you look at that target, compare it to where you're at today, and then wherever you're substantially overweighted, consider selling those and reinvesting in areas of your portfolio where you're underweighted. Now, one thing to be cautious of, if you're rebalancing in a taxable account, that may produce taxable gains. So if you have the option, it may be worth trying to rebalance and get you back to target using IRAs and 401ks, since those are going to be tax protected. Part 5, revisiting insurance. Now, before you click away thinking that I'm going to sell you on some expensive life insurance policy, I do not sell insurance, but it is an important component of a financial plan, especially for people who have kids or family members who depend on them financially. If you've had major changes to your lifestyle this past year, like maybe you've welcomed a fresh baby or you got a new house and now your fixed expenses are a little higher, now would be a great time to check to see if your life insurance coverage is still adequate for your family in the event something were to happen to you. Now, I have my own process for evaluating life insurance needs for families, but this calculator is a good starting point. It's also a good time of the year to reevaluate home and auto insurance coverage. A lot of times people will get a policy and then prices slowly creep up over time, and it's years before you even realize it. So the first thing you can do is reach out to your current provider and just see if there's any discounts or adjustments available. If your life changed in any way, like maybe you're driving less miles or maybe you got a home security system, those things may actually bring down your premiums. It's also worth shopping around to get some quotes from other carriers just to make sure that you're still getting a good price. Part 6, estate planning. By far the most boring and the one that nobody wants to do, but the most important if you end up needing it. One of the most critical aspects to this, especially if you have kids, or I guess only if you have kids, is guardianship. If you have minor children, you want to make sure that you have a guardian named in your will who will care for your children in the event of your passing. A lot of couples will get their will prepared before they have kids and then they forget to update them after they have kids. Or you named a guardian years ago, but that person has since gone off the deep end and is no longer a good fit. I've had situations where I'm reading through a will for a new client and it turns out that the guardian that they have named is no longer alive. So you definitely want to check in on this on a regular basis. Same thing with your executor or trustee. This is going to be the person that makes sure your wishes are carried out in the event of your passing. They're going to be distributing all the assets for the trust document or your will. They're going to be paying down debts with that and taking care of really all of the logistics as it relates to your finances. So you want to make sure that the person you select for this has the capacity to do so. I know a lot of people have named their parents, but over the years, it turns out that maybe their parent is no longer a good fit for that task. So again, something to check in on a regular basis. And while you're in there, just skim through the rest of your will or your trust documents and just make sure that it accurately reflects your wishes. And then the last thing on this point is double check your beneficiaries on your 401k, your IRAs, your life insurance policies. Again, this is something where people set up and then they kind of forget about it, where life changes like marriage, divorce, new kids could change the dynamics of that. So always good to check your beneficiaries once a year. Okay, and then finally, number 7, just take some time to reflect on the past year and plan for the next year. After you go through all this, I think you have a pretty good idea for what worked well this past year, what didn't work well, and some areas for improvement. And every year, you just check in on these things, tweak things as needed, and then prepare for the next year. What I like to do is actually map out my cash flows for the year. So I'll look at my projected income, That allows me to dial in my savings targets for the year, and not just for investment accounts, but for also big purchases like buying a property or welcoming a new family member. And no, mom, that is not a pregnancy announcement. And then I think it's also important to set spending goals for the year, vacations or big purchases or just things you want to do together as a family. Start figuring out how those are going to get funded the next year. It's very likely that a wrench will get thrown in your plan next year, but having a starting point and a plan is better than no plan. Well, thanks for watching. Subscribe if you found this helpful. See you next time.